Good morning, everyone. I'm Janelle Dumalaon, and in this session, we're asking whether offshoring crypto is an issue for US national security. If that's what you came for, then you're in the right place. Now, this is a question we're asking at a time where regulatory uncertainty around crypto in the US is prompting US firms to look elsewhere, like Asia and the Middle East. We're going to be looking at what consequences that could have and how to potentially mitigate them. Welcome to all of you. On stage with me are panelists today. Juan Zarate, former Deputy National Security Advisor and current Global Co-Managing Partner and Chief Strategy Officer at K2 Integrity. Hello.
Hi, Janelle. Thank you.
Sigal Mandelker, the former Undersecretary of the Treasury for Terrorism and Financial Intelligence, currently General Partner at Ribbit Capital. And Yaya Fenusi, Director of AML and Cyber, Crypto Council for Innovation. And you told me to call you Greg X, so that's what I'm going to do. Greg X is General Counsel and Chief Compliance Officer of Multicoin Capital. So glad you can all be here. So this is basically framed around a yes or no question. And I'm guessing the answer that you would all have is yes, it is in fact a national security issue. So if we go around very quickly, I want to hear from you what the most important threat is concerning offshoring crypto. Very quickly, in a phrase, if you can, starting with you, Sigal.
Well, the biggest threat, we know that when we have entities, regulated entities that exist in this country, from a law enforcement, anti-money laundering, national security perspective, whether it's crypto or banks or other entities, that we're always going to be much better off going after illicit activity when it happens through that domain. Again, it's the same for banking, it's the same for crypto, it's the same for a wide variety of different industries. Part of that is because regulated entities in this country will have compliance programs. They will file suspicious activity reports. They're tracking and monitoring and working closely with the public sector on a wide variety of threats. That's the, I'll wrap it up.
A phrase.
Yeah, go ahead, sorry.
We'll get into it in a minute. Illicit finance. Greg.
Yeah. So my background is as a regulatory attorney and a securities attorney, now an asset allocator. And so while I see a lot of issues on the regulatory side, I think to me, from a national security perspective, one of the most important parts of our country is obviously our economic strength. And what builds our economic strength is innovation. If we are driving companies offshore, founders offshore, good paying jobs offshore, we're also driving that innovation offshore. And the reason we're doing it is because we are both not presenting a welcoming environment and also muddying the regulatory clarity that makes innovation happen here. So at its heart, I think one of the most important aspects, although I echo Sigal's sentiments, is innovation matters, and it's bad if innovation doesn't happen here.
Illicit finance, driving away innovation. Yaya.
Well, connected with maybe both of those is the idea of global competition and the future of the digital economy, the future of digitization within finance. The leadership in that realm is up for grabs. And one of the key adversaries, one of the key competitors is China. And I hope we can talk a little bit about what China is doing and how what we do with crypto may impact how we can compete with what China is doing.
Illicit finance, driving away innovation, China.
Janelle, I think crypto and the innovation around it relates directly to our national economic security. And if the US wants to be the center of gravity for the future of the financial system, if it wants to drive influence through the use of its economy and innovation and the role of the dollar, it has to be at the center of gravity for that innovation. It can't allow that to be offshored, and we can't get behind. If we're going to drive the standards and norms for the financial system of the future, and if we all agree that the economic security of our country is embedded in our national security, then that innovation needs to happen here first and foremost.
setting standards, China driving innovation away, and illicit finance. So these are the things to be worried about. But Juan, I wanted to start with you. So we're all familiar with this phenomenon of offshoring. Do we have a sense of the scale? How much is this happening? How much is crypto business being driven away from the US?
Well, I think all of us can speak to anecdotes that we've seen. I don't have sort of the top line figures, but we do know that crypto innovation is going offshore. We just saw a panel talking about the European Union trying to set the regulatory framework to draw in innovators, to not only drive investment, but also to pull from the United States and other parts of the world. And so there is a global competition for the talent, for the infrastructure, and the technology. We're seeing that every day. And as Sigal said, the regulatory uncertainty has accelerated this sense that the US isn't necessarily where you want to innovate the next generation of what happens in the crypto or DeFi ecosystem. And so I think there's a lot of worry in the space. You know, I've been an advisor to Coinbase since 2014. You've heard Brian Armstrong talk about maybe going elsewhere. When you have the largest crypto exchange in the United States, one that wants to be compliant, one that wants to drive the system, one that wants to be a champion for American values, frankly, talking about moving offshore and thinking about what that looks like, that's a canary in the coal mine for a real problem. And I think we've got competitors like the Europeans, like folks in the Middle East, certainly Singapore and others in Asia, and China, of course, that want to draw that talent, want to draw that innovation for their own purposes and their own economies.
Now, just picking up on that, so Yaya, if we're talking about strategic competitiveness, we might as well name the pacing threat to the US when it comes to strategic competition. We're talking, of course, about China. How does that competition, where is the US in relation to China? Where are they in relation to each other when it comes to competition for hosting crypto companies?
Well, we're talking about an area that is still nascent. The issue is that China has a very, I'd say, clear, sort of concrete vision about the digital economy, the internet of the future. In fact, China doesn't use Web3 so much, but this idea of Internet 3. The idea that the internet is going to be connected with really all things, the mix of the virtual and the real world, and building really a state that is driven by data, where data is really a factor of production. I mean, you actually see that language in actual government statements about the digital economy. So there's a clear vision for the digital future. And then you could point to lots of different efforts. I mean, there's what China is investing in terms of blockchain domestically. There are some efforts to build blockchain cloud infrastructure, like the BSN that people are probably familiar with looking globally. Of course, there's the ECNY, the CBDC. All of these are just components of this digitalization strategy, and that's a term that's in China's FinTech development plan. I would just place that compared to the U.S. vision, which is not as clear or concrete, I would say, right? I mean, I think the White House has put out a lot of statements about the importance of digital assets, but there's not really a clear vision. So if there's not a clear vision that's articulated about what the future of the digital economy should look like, what are I would say, the sort of even the moral and ethical guidelines for digitization. You know, what does the Fourth Amendment look like in a digital environment? That's a question that needs to be answered internally, and I don't think we've really done that, whereas China has its clear direction, which is authoritarian, and it's going head first.
Now, of course, without clear regulations, the issue of compliance is always going to come up. And this is your background. You know all about anti-money laundering. You know all about terrorist financing. So, Sigal, what does this lack of clarity mean for that work?
That's a great question. Well, I want to make a distinction because on the illicit finance side, we were actually the first in the world to provide clarity. In 2013, before I was at the Treasury Department, FinCEN met with a bunch of exchanges and they said, look, what you're doing looks an awful lot to us like money transmission. And if that's the case, you really need to abide by the money service businesses laws. So what happened? I mentioned it before, those companies came in, they started to build out amazing compliance programs. We had great companies that were born out of that effort in the US, including blockchain analytic firms like Chainalysis and others. And our level of sophistication in terms of the capability to go after illicit finance, because we brought people into that regulated space, just grew enormously. The amount of illicit finance in crypto as a percentage went dramatically down. Some of the biggest money laundering cases in history, and the biggest seizures for sure in history involving money laundering, have involved crypto. That's not because those are the biggest cases in history. That's just because our tools and capacity to go after illicit finance when crypto is the mechanism has just increased dramatically. So when you bring companies into the regulated space, as we did, we also issued a lot of guidance when I was at Treasury. We've got other countries to have similar rules. That's where you're going to find a lot more security, enhancement of our ability to go after bad actors. All of that is an incredible positive. On the other hand, we haven't had that kind of clarity in other coming from other regulatory agencies. And that is starting to drive a lot of companies offshore. My biggest worry is that the push for to push those companies offshore because of the lack of clarity and regulation by enforcement is also going to severely limit our ability to go after bad actors when they decide to use crypto as a mechanism to launder money. That's the big issue. And we're seeing that in the numbers. USDC going down, other stable coins, which is issued by a US company backed by reserves. That volume is going down while other stable coins are going up. All of that will be to the detriment of every single issue that we've been talking about here.
Now, it does sound a bit commonsensical that it is easier to enforce these things when they're brought into the light instead of pushed away or pushed underground even. Now, Greg, you made this point earlier about the costs of driving innovation away. Tell us in detail, how does that look like for the United States?
Well, I think, first starting with why we're driving people away. And Sigal raised an excellent example. In 2013, FinCEN looked at this industry and created a regulatory framework that enhanced our national security, our ability to surveil. It also enhanced indirectly consumer protection, but it did so by taking a measured approach and creating a framework that achieved the principles while making it achievable to comply. And no one is going to sit here and argue that regulation of crypto markets is simple, in large part because it touches almost every federal agency, and in large part because it also raises a lot of new issues of disintermediation and intermediate regulated systems. But it's very important that what we produce has some clarity, but more importantly, it has to be capable of being complied with. The industry will do well. It doesn't need regulatory frameworks that are a free pass. No one is asking for a free pass. There's a desire for clarity and something that can incentivize people to comply by creating a path for it. Right now, we're not doing it. Part of it is because of our regulatory framework is very fragmented on the state and federal level. A lot of our competing jurisdictions, whether they're totalitarian or whether they're democratic in nature, tend to have fewer regulatory touch points with the industry, and therefore it's easier to push out guidance. But if we don't get it right, we are seeing companies move. We're seeing jobs move, and we're seeing IP and innovation move, and all of those are to the detriment.
Can I just add a point here? I mean, the fascinating thing about this space and the lack of clarity and regulation by enforcement is that this is actually an industry that's clamoring for regulation. Think about all of the efforts to try to get a stablecoin bill passed, a market structure bill passed. That's by companies who are saying, regulate me, tell me what the rules are, make me, prove reserves, whatever, have compliance officers. They're actually saying, impose compliance costs on us because we want to be within the regulated sector, so we can protect consumers, so we can go after illicit finance. I mean, it's just an irony that you have a sector that is asking for regulation, and yet on the other side, you know, you have certain regulators that are just saying, nope, we just want you to go elsewhere. One of the biggest limitations that we have, by the way, in my opinion, today, is that there are very few people in the regulatory space in the US government today who are actually allowed to interact with the technology other than through blockchain analytic tools. So imagine you're a regulator, you're trying to set the rules, you're trying to give guidance, whether it's in the banking sector or the securities or the CFTC, but you're not allowed to touch the technology. You don't even know how a stablecoin works other than when some company comes in and gives you a demo. Until we change that, which doesn't exist in many other countries, it's going to be extremely difficult for us to get this right. And by the way, the regulators want to interact with the tech.
Yeah.
They're just prohibited from doing so because of some arcane laws. The way to think about this is, effectively, if you believe, as many of us do, that this technology could really form the global financial infrastructure of the future, it's basically akin to saying, hey, if you're going to regulate a bank, you can't have a bank account. I mean, it's like stunning to think that this is what's happening in terms of the severe limitations the government is putting on our career folks who actually, really, many of them just really want to get it right.
Yeah, building off of Sigal's really important point, there's not only a lack of experience and technical knowledge, but there's a lack of vision and ambition. And I think the lack of regulation and then the enforcement that's driving the industry offshore, at least the tendency, doesn't allow for the imagination for where the technology can actually solve these problems and actually be in furtherance of national security. So Sigal mentioned ransomware, for example. What are the tools of tracing and clawback? We talk about anti-money laundering rules and sanctions enforcement. What are the tools of new digital identity or understanding transactionality in a DeFi context? Those are things that can be developed and innovated here and should be in the context of rules and norms and compliance that we want to see. To see that sort of venue, if you will, and that technology and that innovation doesn't allow us to shape that next stage of what compliance should look like. And so there are real deficits there. And then when you look at how authoritarian states like China are trying to control the technology in the ecosystem, there's a fundamental question about how a technology that is ultimately a democratizing technology, one that puts power in the hands of individuals, can be used to further US national security interests. And again, we're seeding that. And what's fascinating, just a final point, we're seeding this at a time when we have finally recognized that we're in a battle in the technological domain and the economic domain with China. You know, the 5G Huawei debate has happened, and we all, bemoan the fact that we've woken up to the fact that you've got Chinese communications infrastructure around the world, and we've tried to convince, Sigal was out there, others were out there trying to convince countries to rip it out and replace. That's really hard to do after the fact. We've got now outbound investment rules on semiconductors, on artificial intelligence, on quantum. So we're now very sensitive to what's happening in the technological and infrastructure space. And at the same time, we're not trying to be jealous about the innovation in this space. And so it's this paradoxical disconnect from a policy perspective that doesn't make sense. And so all of us up here have been urging our former colleagues and institutions to be more ambitious, to be more aggressive about how to innovate in the United States precisely to drive where that innovation goes in the future, so we're not left behind and we're not having to make arguments to rip and replace the next generation of the payment system used by the Chinese or others around the world.
Yeah, do you agree that past experiences were not learned from in terms of semiconductors, in terms of 5G?
Well, yes. But even going off of what Juan said about disconnect, I mean, here's a perfect example of a disconnect and how you have to really be forward thinking. I'm sure most people in this audience are concerned about privacy. Yes, maybe? Privacy in finance? Anyone care about that in mainnet? Okay, so I don't know if you know, but earlier this year, I think it was in February or March, the US put out a paper on the need for strategy for privacy-enhancing technologies. I think there was a different acronym, but basically, data sharing analysis, privacy-preserving technologies in the realm of data privacy, data analysis. So basically, it's a big strategic document that says, because of the importance of data, we're going to have to really advance in privacy technologies. Do control find in that document, you will not see crypto, blockchain, digital assets. There might be one small reference, but it's almost as if all of the privacy innovation that is happening, a lot of the advanced cryptography, zero-knowledge proofs, right? They mention zero-knowledge proofs, but they don't mention that one of the key sectors happening right now in the US that's moving that is in the crypto space. So it's almost like, hey, what is this disconnect? And so that's a perfect example because, again, going back to the China issue, again, other countries have a clear vision about what the digital economy looks like, what finance is going to look like. For the US to advance its own vision, we're going to have to advance privacy technology in a compliant manner. That's the key. And so that's why there's this disconnect. If we're fighting crypto, if we're fighting the expertise and the skills and the technologies, if we're not allowing it to sort of take hold and grow, we're not going to have the alternative system to offer the world.
Greg, what would you say is behind this lack of ambition that you all agree the US has when it comes to imagining the digital future in terms of cryptocurrency?
So there's a practical answer and a nuanced answer. The practical answer is it's tough. It takes a lot of willpower. It takes a lot of political will to work hard to get things right. When it comes to financial regulation, we've got 90 years of sort of barnacles growing around intermediated regulation. It's how institutions work, it's how regulators engage with institutions. Changing that with a technology that allows more freedom can be difficult. We've seen some regulators be more nimble, FinCEN being an example, where they realize this can be a tool and they don't need every transaction to be intermediated. But it's been harder for others. So it certainly doesn't help political fallout. The coverage in most media of crypto tends to be tabloid in nature. There are growing amounts of academic research talking about real issues in crypto. That's helpful. But it's still novel, and it's still a little tabloidy. There still are associations in the common mind, and there aren't as many use cases that are easily grasped. In addition to that, there is a generational issue. And I think that's just a frank matter that it is harder for people who haven't grown up around technology to grok what the potential here is. So I think all of those are top-down issues. To Sigal's point earlier about people wanting to get their hands dirty and having a desire, I've been interacting with regulators in this space for almost 11 years. And whether it's the SEC, FINRA, CFTC, Treasury, there is a great desire to learn. On the staff level, there isn't a fear of the hard work and figuring out how you could build systems that bring this disintermediating technology into intermediated systems. But it's not easy, and you need a mandate from above.
Janelle, just to feed off what Greg said, I think there are two fundamental things that are at play. One is the crypto industry has been viewed through the lens of risk, fundamentally from the get-go, right? And FTX and these other scandals and the speculative bubbles haven't helped, right? And so this question of what systemic risk looks like in the industry, especially as it begins to be legitimated and tied to traditional finance, has been sort of top of mind. And so it's largely been a risk question and not an opportunity debate, right? And I think that's fundamental. The other problem is we're complacent. We're complacent as an economy and as a country at times. We are the center of the traditional financial world and the capital world. And so naturally, we're more conservative. Secretary of the Treasury Paulson used to call this the magnificent glass house, right? We've got to tend to that glass house. Well, you've got to be careful with what you move and how you shift in that regard. So there's a conservatism to what we are and a question of, do we really need this? And I think it's a lack of appreciation for what this technology allows for and what's happening next. There are two factors that I think are important. One is the international competition. There's no question that other countries, including other central banks, including in the European economies and others, are investing in this, looking at it, consider it a serious technological and future shift. The second is you've got players now in the US economy, not just the Coinbases of the Circles of the world, but PayPal, Visa, Bank of New York, that are invested in and playing with and using this technology and recognizing that it's part of a financial future. And I think that has to happen. We've got to move from kind of a very simple view of risk to a much more nuanced view of managing those risks. There are risks, but also viewing this as an opportunity, and an opportunity to continue to have the US at the center of gravity, and frankly, even to reinforce the role of the dollar through the way stable coins are used in other ways. So that's why it's really important, and I think we've been caught in this maelstrom of risk and a binary of it's good or it's bad, and I think we've got to break through that.
Yeah, and to that point, and I think you touched on it for a moment earlier, we are in a war also over the role of the dollar, which has been accelerated after the invasion of Ukraine and the deploying of sanctions against various Russian entities. For us not to realize the value of stablecoins like USDC or Paxos dollar or Gemini dollar to export dollars and reinforce the role of the US dollar when other economies are really testing out settling in alternative currencies, which is a dramatic national security issue.
The other thing that we have to start to recognize is that, yes, we're the center of the global financial infrastructure, but that but is what we have seen really since 2012 is a massive move of our banks to de-risk all over the world. So you look at huge parts of Latin America, our banks have pulled out. You look at the continent of Africa, pulled out or not participating. The Middle East, Asia. And by the way, this became very clear to me when I was at Treasury and I would travel all over the world and heads of state, finance ministers, CEOs of banks would ask me for help to get them access to US correspondent banking. So yes, in many respects, we are the center of advanced economies, et cetera. But we have also retreated. And this technology, which is building out global financial architecture and infrastructure, which allows people to innovate. If you're in the United States, you can innovate on the same chain as somebody in India and develop all kinds of different exciting applications together. This technology is that opportunity for the US to our capital markets, our companies, our private sector to re-emerge as the center of gravity in all of those parts of the world where our banks have pulled out. The other thing that we haven't spoken about here, and I'm sure was covered in some other panel, but the truth of the matter is that all over the world, people live in authoritarian governments, under authoritarian regimes, where inflation is much higher than the United States. It's insane, right? And they want to have alternative places to store their money, to earn a little bit of income, et cetera. And this technology gives them that freedom to be able to participate in ways that they can't otherwise under their current architecture. That's a human rights issue, by the way. That's an issue that involves all sorts of things that also touch with our national security.
Now, we're running out of time quickly, but let's talk policy recommendations. Just very quickly, if you were given the unilateral mandate to achieve a clear regulatory environment, what is the first thing you would do? Starting with you, Juan.
I would set a broad vision for what we want to do with the technology. To Yaya's point, you've got to have a strategy and a view as to the utility and use of it. You then have the framework for consumer protection, you then have a framework for compliance, and you then have a framework for innovation and investment. And having that framework and not having it driven by piece enforcement is what has to happen. And I think it's what we're asking for. The other thing I would say is we need to continue to innovate and invest here. And so we shouldn't cede the power of the private sector to do what the private sector does best, which is to innovate and to come up with use cases and answers so the policymakers see what that looks like, see what the possibilities are, because the imagination has to open.
Yeah.
Allow for a regulatory sandbox for privacy compliance technology in the financial system.
Greg.
Protect developers. Code is not regulated anything other than by zeros and ones. And activity that relates to software and the operation of it may be regulated, but don't put developers in jail.
I would completely cut through the turf wars that we're seeing between our different agencies about whether something's a security and a commodity. We just got to get rid of that debate, provide a pathway for innovators to come in, a regulated pathway to comply. And by the way, I would allow the public sector to interact with the technology before they are allowed to regulate.
Thank you very much. That's all we have time for. Juan Zarato, Yaya Fanusi, Greg X, and Sigal Mandelker. Thank you for your insights today.
Thank you.